On in, come on in. For those watching the replay, you can fast forward a little bit. Not as much as usual. We're going to get to it. Um, got great feedback from last week's show. The new 2026 money mark, kind of the real me. Coach A-Hole on vacation. Dummies on vacation. I'm just going to verify that we got audio and video, and then we'll get started. And I think by cutting out a lot of stuff, maybe we can get this down closer to an hour, hour and a half, giving me more time to spend with my daughter. So that message resonated well last week. No pushback. It was actually very little negative feedback on, oh, I'm going to miss the dummy routine and all that stuff. Yeah, okay. So we'll see how that goes. We do have audio. We have video. We have viewers. Not as many as we're used to at this time, but that's cool, right? Not sending invites out anymore. Not like the whole thing I talked about last week. We don't need to repeat it, but we're going to keep with that because the core, you core viewers, you people who really want to learn, that's who I really care about, not the other, I don't know what percent of the 10,000 global followers really care about learning what this is all about and what I'm here to do. So, with that being said, here are the disclaimers on the screen. They are there for you to read. If you cannot see this or read this, you must acknowledge that you have somebody. You'll take a look at it. You'll have somebody read it to you, whatever. Just know I'm not a registered financial advisor. This content is for informational purposes only. It is not should not be construed as an endorsement of any investment. Do your own investment research, blah, 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 blah. It's all here on the screen right now. So the only part that you can't read right now is the bottom line, which says this content is for informational, educational, and entertainment purposes only. Okay, so that takes care of that. Next, boom, fear greed index, macro. And hello to everybody. By the way, you guys already chiming in. A lot of the names that I recognize, so that's it. These are my inner circle friends on this show, so that's great. YouTube notifications glitching again. I can't help that. I don't understand why Google can't get that straight. Like, that's really strange to me, but whatever. I'm here. It's 2:00, so easy enough. May not be here every week, by the way, because as we go through the macro, what you're going to find is we are going deeper and deeper into yellow alert. Am I switching to red? No. No, like the fundamentals of the U.S. economy are strong. What's going on with Tether and stable coins, I think that's positive for the U.S. dollar. That's positive for interest rates. The oil, which is probably the single biggest determinant of inflation. Oil basically goes into everything. Oil prices have been tame. So we got an economy that's moving forward. I'm going to show you the Atlanta Fed's forecast for Q1 GDP in a minute. And you're going to see everything's going strong in the economy. The problem that I have with it is that the stock market seems to be reflecting that pretty fully. All right. So if you ask me if the next 10% is up or down, I would guess down. You never know for sure. Back in 1996, we went into the kind of internet bubble and, things just broke out of the long term. We can go to the charts here real quick. You could see, boom, right above the long-term risk reward lines. S&P did the same thing. Chart going back to 1962. We only have 2 times where we crossed this red line, and one was during the internet bubble and one is during the AI not a bubble. It's a build out. For those of you, I know there's one of you in this chat who likes to argue with me. Don't argue with me. It's my show, and I'm not going to debate you on this. If you've got 30 years of experience in the technology sector doing what I did, then you can start your own show and give people your feeling on this. But, last I checked, Taiwan Semiconductor blew it out the water and kept sending these semiconductors higher because AI is not a bubble. It's a build out, which, by the way, ultimately you may at some point in the future say, I was right, it was a bubble. No, you won't be right. You're gonna think you were right, but that's because you don't know the difference between a build out and a bubble, right? All these companies are building out their data centers. And if, let's say, there are 10 players out there that want 5 data centers each, starting from zero, because there were 0 AI data centers, right, when this whole thing started. Well, and then they want to add one every year on top of that. Well, look what's going to happen. You're going to build 5 data centers really quick and then only add one every year after that. So what's that going to look like? A big spike, right? To build out those 5 data centers times 10 vendors, et cetera, right? And then it downshifts to just one a year. So it's going to look like this. It's going to look like a bubble. If you want to call that a bubble, be my guest. But to me, that's not a bubble. That's a build out. There's a difference. Anyhow, so getting back to where we are today on the charts. There you go. Pull that out a little bit more, right? S&P above the red line, Qs above the red line. And now, what I tell you, the last bastion, the IWM, the small caps, we've been talking about the small caps being the only safe place left in the room, and it has been ripping. The Russell 2000 has been on fire to start the year, but now deadly close to this red line. Okay, 2% away from the red line. Now, mind you, back in 2021, we got above the red line. I would tell you that that was a small bubble for 2 reasons, right? 1, people were inside COVID. 2, people were playing with government money, all that stimulus money, all that PPP money. You're sitting at home with lots of government stimulus. What are you going to do? Right? Baseball cards went crazy on eBay. Stocks went crazy on the stock market. And a lot of stocks got way overvalued. And we saw that manifest in a strong pullback. Okay, so long-term valuations are stretched. That is evident in my work. It's become harder and harder to find new picks. And I'm not just going to make them up. Like a lot of those, you got 10,000 people out there. I'm not going to call them clowns because they're not all clowns. But I mean, some of them are just outright outlaws, criminals, right? Like this would be really easy. This job, like if what I was trying to do was purely make money, right? If the U.S. government came out and said, you know what we're going to do? We are going to eliminate all securities laws, right? And what we want to see is who can make the most money. It's a contest. You got 1 year, go. The first thing you do is you go and you find the lowest float stocks in existence, right? You look at each of them, see which ones you can concoct some crazy bullish story about, and you present every day a new low float stock, right? What do y'all know, right? A lot of 99% of investors, and I'm being kind, it's more than 99%, don't really understand how to evaluate a company, a stock, right? So that's what's happening now. That's the name of the game for a lot of people. There are people out there, literally, I looked it up. There are, here we go, 2 dozen companies under 300 million in market cap that jump 25% every day. Every day, there are 2 dozen stocks that move 25% in the course of a day. That doesn't make any sense. It makes even less sense when you realize that 2/3 of those make those moves on no news. Something must be pushing those stocks 25% on no news, right? And then to take it a step farther, I wasn't able to get this information because AI wouldn't know. But of the third that move on news, I'm not going to show it actually because I don't like. There's certain stocks that I'm not talking about because I don't want to step on any toes. But there are companies out there that come out with news, and the news is BS. In my opinion, right? When I examine this, happened with this one, I'll put up SIDU, okay? And this was one that I came here and told y'all that I was shorting. I think right here because they put out a press release regarding an IDIQ, a $2 billion IDIQ. We've been selected. Yeah, you and 2,000 other vendors. Being selected for an IDIQ does not mean that you've been given a contract. That means that you have been given the go-ahead to compete for business. In other words, you may not get any business. And yet the stock ran ahead of that announcement, and then on that announcement, 191%. Okay? Why? My assessment, they needed to raise money. They were almost out of cash. They had SEC filings out there that made it clear that they could raise money at any moment, and I thought that this was going to be the moment, and it was. The stock dropped 37% in a day. If you got excited by that press release, $2 billion IDIQ, it sounds great, unless you actually understand what an IDIQ, being selected for an IDIQ means, you could have been screwed. So what I'm saying here for y'all, to have your notebooks, right, is be careful. Be very, very careful. Understand who you're dealing with out there, because there's a lot of folks out there. And when I saw the numbers, it was crazy. Like, these people, they're people making millions per week. Millions per week doing this stuff. Very sophisticated, right, gangs, I'll call them. So, all right, that's my sermon for the week as far as that goes. We'll have more to talk about. But getting back here, look, and the market is getting, whoa, look at that. We're now in greed territory. Remember when I told y'all when we get into extreme fear territory, that's the time to buy? November 21st. Let's see what the market has done since November 21st. Come on. Sometimes the chart acts up a little bit. There we go. We want to get to November 21st. Let's pull it back. November. Oh, wow. Shocking, right? The fear greed index gets into the mid-single digits, right? Here it got, I mean, you don't have to nail it, right? But if you get into the mid-single digits, we went from 12 to 5. There's mid-single digits. That was your cue to buy. April 4th. You go back to April 4th, you'll see this, basically the same thing happened as what happened when we got down to, even if you missed it, like 8. If you say that's mid-single digits, that's November 19th. November 19th is right there, right? A couple days later, we hit 5 or 6 from 8. There's not much room to go down. There's extreme fear. And from extreme fear, you get a big move up, 16% on IWM, an entire index of 2,000 stocks, averaging 16% gains in just a couple months. Okay, so sometimes it's as simple as that. Let's see what else we got. Interest rates, nothing to see here, just bouncing along a range, so that's cool. And then GDP now, let's reset this so we get the latest and greatest information here. Look at that, Q4, not Q1. Q4 estimates, look at that, calling for 5% growth in GDP. Sounds pretty healthy to me. The range of the top 10 and bottom 10 average forecasts crossing over the zero line. In other words, basically nobody, maybe, look at that, one person thinks that we didn't grow last quarter. All right, so economy's doing well. So that takes care of that. Oh, by the way, so I actually did have SIDU on the docket to talk about. Here we go, January 12th. So after the pump, after the dump, I'm sure you guys noticed on this chart, because I talked about the pump and the dump, it kept pumping. Why? How? And well, why? seems pretty obvious because they wanted to raise more money. Okay. But then it keeps pumping. Why? Space. Status space. Right? On top of that, you get a Wall Street report. Commercial liftoff into a multi-domain defense, blah, 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 with a buy rating and a price target of $10. Bro, where were you 1 month ago when this stock was trading for 70 cents? You're nowhere where when it's 70 cents, but when it's $4, 1 month later, 6 bags higher, you're calling it a buy with a $10 rating. They just happen to do a raise with your firm. Shocking, right? Let's take it a step further. Who is this guy? This is the analyst at Think Equity that initiated coverage on SIDU, right? 1-star rating. Ranked 10,000 out of 12,000. Success rate. You can't see it on the screen. Let me pull it up. 43%. Yo, like, how? I wonder if they won't allow that. They won't allow that. How in this stock market do you only get 43% of your picks right when you're supposed to be a professional? I'll tell you how. With I don't want to cast allegations because I don't want to get sued. And it's funny because I've actually dealt with Ashok Kumar in the past. Okay. And I wouldn't peg him for a crook, so I'm not going to call him a crook or a pump or anything like that. You guys can make your own opinions, but suffice it to say that, let's say his track record isn't good. His average pick is down 2%. Okay. So is this somebody that we really want to listen to and pay attention to with his assessments when everything I've said, is true? Crazy. And then just to put a little bow on it, got a little AI chat here, right? Let's see what we got here. Zoom that up. And you got, all you have to do is ask, right? How do you explain this attention if they're overblown? Like, Gemini helped me go through the process of assessing this company and what they have. And the satellites that they've got a couple of satellites that have been up there for a while, generating almost no revenue, right? You can read this on your own, right? Just tying itself to the Golden Dome, to space and all that stuff, to the point where I heard Morgan Brennan of CNBC interviewing the CEO of this company yesterday on a podcast. And I'm like, how the hell did this woman with $3 million in revenue get on a CNBC program? Welcome to America is the bottom line. All right. So that's that. Be careful, man. All right, let's see what else. We got AHR. Let's see. We got inflation versus GDP. Inflation's good. GDP's good. I already said that. Ludnick was on the All In podcast and talking very bullishly about the economy for what that's worth. So cross that off the list. We'll take care of these things after we take care of these things. So AHR. Doing well right now. Sorry, I got to apologize. And this is the thing, this is for informational purposes only. I didn't want to chase, what was it? Yeah. This Friday, boom, right here, right? At about 3 p.m. or so, right about there, I was like, I don't want to chase this, right? It's up so much so quickly, I don't want to chase it. And I know, there was somebody in the crowd here, saying, oh, well, it was down ahead of the print. So, this is just making up for being down ahead of it. Well, it was up ahead of the print too, up and down. You can't do that, right? All I know is the stock was reacting heavily to the news. I couldn't, in my own mind, say like, oh, if it was up 5%, cool, right? It was up like 15%. I'm not going to chase it. And the stock's, up another 8, 9% since then. Oh well. Oh well, right? Like I'm not a fan of chasing moves. And by the way, this is how you avoid pumps, by the way. You've got stocks out there. You've got so many stocks that are jumping, right? Let's see. Stock market gainers today. Let's see if this one gives it to us. There we go. Look at this. Look at that. What is the stock up 556% today? It's crazy, right? Let's see. All right, that's what we want. 120%, 88%. You see this? Like, do you want to chase these moves? No. No, like most of these moves are probably pumps because, like I said, on an average day, right? Look at that. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. That's 18 stocks up more than 25%. That doesn't even count the ones that maybe were already up 25%, went back down, the ones that might move 25% before the end of the day, et cetera, et cetera. And according to the statistics, 2/3 of them don't have any news. And the ones that do have news probably don't have news that justifies a move that crazy, right? So what happens if you chase these moves? There's a good chance you lose. So, be careful about what you're doing out there. Like, you don't want to gamble with your real money. You want to gamble with your play money. You put a certain amount of money aside, you go to the casino, or whatever, you play with that. Don't do that with your investment money. You don't need to. I've said this before. You don't need to gamble to be successful in life. All right? I started with nothing, and I didn't take big gambles to get where I am now. All right. AHR. No chasing notwithstanding, this was good news, right? We talked about it. I'm positive on the company. I still own shares of the stock. I just didn't buy more on the news because that would have been chasing. I should have bought it in the morning. We talked about that last week. But yeah, man, I'm happy with what's going on there, and we see the Fox XP system getting some attention. That's what I want to see, because you got these Sonoma systems. These Sonoma systems are inexpensive, but they're hot. We want to see the Fox XP system get hot because those systems can be 10 times more per unit than these ones, right? And I think we'll see it. This is the thing, is that these systems are good. You've got wafer level burn-in, you got package level burn-in. Both of those things are becoming more prevalent, more important, right? When you look at Micron, that was a great one. Look at that, right? What they're doing is they used to just make DRAM, right? Not just DRAM, but you make DRAM and it's just a DRAM. You get a chip, boom, one chip, one chip, one chip, one chip. Well, now it's not just one chip, one chip, one chip. It's a chip stack. They stack these things on top of each other. So if you make a stack of 10 chips, right, so that it fits into the package better, and you can cram much more memory into an AI data center in a stacked environment. The problem with that is if one chip messes up in that stack, the stack is no good, and now 10 chips go out the drain. So they need to have different testing processes, different manufacturing processes to make sure that the yields are stronger on those chips, so you're going to see more of that. You're going to see more stacking as time goes on. I've been looking into this area. It's got to be well over a year now. The fact that we're just going to see more stacking and things of that nature with AI coming into the fold. So there are areas that we don't even really know about. There are customers that we don't know about that will become Air customers sometime in the future, because the trend is not likely to reverse. It's a matter of physics. We got to a certain point and you just can't get below, like, we're at 2 nanometers. You can't, we're hitting the physical limits of how small you can make something. And now you're going to have to move it along the third dimension. Instead of having a flat chip, you got a stacked chip. They take up more power. All these sorts of things are things that are not going to reverse and go the other way. So it's kind of like Air's time, right? What they've been doing for, I've known this company since like back here, and the company went nowhere for a long time. I mean, look at that. All that time they went really nowhere, up and down and up and down. And finally, when their time came with EVs, the stock took off and never looked back. And the stock is really never, after that buy, right? Once they hit gold mine and took off, the stock never came back. The new low, the most recent low, is still higher than the previous high of the last 10 years. That's what happens when a company hits what's called an inflection point in fundamentals. So, all right, so that takes care of that. We can answer questions, of course. So, a question that I get a lot from people is, why has it taken so long for their products to proliferate? AI has been hot since, what was it, ChatGPT 3, November of 2023? Over 2 years now. Why haven't these guys really, revenues taken off? Well, that's real simple, all right? And you can ask, and in fact, you can replace that with AEHR, right? Instead of there, you write AHR. I was asking another question about air, so now it's why does it take so long? You ask that question, and it'll give you this answer, which you can read later if you want here. But you have to understand the industry. What goes on in the industry is that this is a completely different way of doing things, number one, which requires completely different equipment. And these semiconductor companies have existing processes and existing equipment, right? And if they bought that equipment anytime in the last 2 or 3 years, they're not going to just throw it out just because Airs is better. They have to do a math equation and say, well, we were planning on depreciating this equipment over the course of 5 years, 7 years, whatever, 10 years, right? We're not done depreciating that. That's going to continue to hit our income statement as we depreciate that equipment over the next few years. And we're just going to throw it out and replace it with something new. If we replace it with something new, that something new has to make for us more money than we're throwing out just to be a break-even proposition. Okay, so that becomes difficult. Then, being a new process, the people that are in charge of processes inside the semiconductor companies have to learn what this new process is, understand it, feel comfortable with it, and confident to the point that they won't lose their jobs by putting this process in place with this vendor that until the last couple of years wasn't anybody had heard of. So we're going to do new processes with a new vendor that nobody's ever heard of, and my job depends on it. Maybe I'll take more than a week or two to make that decision. And in fact, it can take years. And it has. So, if you ask this AI, I just scrolled it down so you can, check it out later. You can see all of the reasons that it gave. This was actually a very good summary. I don't always get a great summary from AI. By the way, this week's AI tip, what I often do is I will ask Gemini, and I subscribe to Gemini Pro, there you go, all right, and Grok Pro, both, $60 total per month. For me, it's a no-brainer, right? If I'm working 60 hours a week, 4 weeks in a month, I'm paying these things 25 cents an hour to work for me. What I'll do is I'll ask Gemini a question regarding research. It gives me the answer. I'll take that question and answer and go to Grok and say, Grok, I asked this question and got this answer. Tell me what you think. And then Grok will tell me what it thinks. It might say, that is a great answer. I agree with it 100%. That hasn't happened yet. All right. Unless I'm asking, what was the Celtics score last night? Grok's not agreeing 100%. So then I take what Grok says and I take it back to Gemini and I say, here's what Grok said. What do you think about that? And I let them fight it out until both sides fully agree with each other. And then I say, now, give me attribution to everything you just said. Give me links that prove everything you just told me. These aren't your opinions. These are, statements of fact that you just gave me. Where did you get these facts from? And then I'll go and check those facts myself. That's how you use AI. That's how you get around the hallucinations, right? We've talked about that before. AI will make stuff up. Well, guess what? Gemini, Google has its own LLM. Grok, right? Elon Musk has its own LLM. The chances of two LLMs hallucinating the same way is fairly remote. So if Gemini gives me some hallucinated answer, Grok might call Gemini on it. And then I can, test the final result. All right, cool. So there you go. Yeah, Daddy, Moore's law is hitting a wall. Absolutely. That's with regard to technology and semiconductors. So, okay, so that takes care of that. Birchtech doing a raise, and people ask, why are they doing a raise? They won a $73 million judgment. So why are they raising $20 million now? Well, they're not getting paid that $73 million tomorrow, right? There's some minor, I think, challenges that can still come up. My folks think this is rock solid. I think this is rock solid. They're going to get their money net of, whatever, legal fees, taxes, et cetera, et cetera. But that's been calculated in. I showed you the Wall Street research on this several weeks ago. A chunk of this money is to fund their continued operations they're going after. There's like two other companies that I know of right now. There was good news on this. I didn't put it up on the board. I probably should have. It was a press release. I don't know if it was a press release or a legal brief. Two companies were trying to defend themselves against Birchtech in a way that one was sending out certain defenses, the other one was sending out different defenses or overlapping defenses, and a judge said, nah, y'all can't do that. You're going to combine all your defenses into one because we know what you guys do. You big companies, you try to drain the little companies that are suing you of their money so that they can't complete their court case before they win. We're not allowing that to happen. So Birch is raising a little bit of money to show strength, to show we got more than enough cash to fight you. By the way, somebody just lost for 73 mil. Do you want to be next? And we got plenty of cash to do that, right? And then a portion of this money is going towards an uplisting, right? So you can see here in connection with this offering, we intend to apply to list on the New York Stock Exchange, the NYSE American. Okay, so that's an uplisting from the OTCs. That is going to allow a lot more institutions to buy into this company. There's a lot of institutions that are disqualified. They're not allowed to buy companies on the OTC. Okay, so they're presumed they're going to move on to the New York Stock Exchange. That's going to give them more visibility with institutions that some of which I heard are already wanting to buy the stock, but just waiting for an uplisting to do so. Okay, and why? Well, because you've got a company here. Let me see. BCHT stock. Let's get the current market cap. Current market cap, 76 million. Okay. $73 million judgment in their favor. Net of, you got to net out the expenses and fees. Maybe it's 50 something million, right? So out of 76 million, we're presuming that there's going to be over 50 of it sitting in cash. Plus the 20 that they raise, plus they have $18 million of recurring revenue that comes in from licensing those patents that they're now defending from the people that are violating those patents. And what does that patent technology allow? It allows these coal plants, and coal plants are firing up. We need electricity in this country, right? But they can't, pollution is an issue with these coal plants. Well, that's what these guys do. They get pollution out of the air that is coming out of these coal plants. It also it works for water as well. So you get PFAS, the PESI stock, right? It's been doing well because of that, among other things. And so you've got 50 plus million in cash, plus another 20 million in cash, plus the 18 million of recurring revenue, plus whatever that grows to now, right? As the patent violators get in line, as coal plants continue to operate, and now a whole new frontier in terms of water, which from what I'm hearing from the CEO, looks like that's going to get off to a very hot start. So boom, there you go. In the meantime, right, what does it look like to investors? Well, there's a D at the end of the ticker symbol. That doesn't look great. They are doing a raise. That doesn't look great. The uplist, okay, cool, but if nobody read this, then they might not know that there's an uplisting associated with that, right? And then boom, there's the chart. It's actually doing, it looks pretty good to me. It's curling up, right? In the wake of, they spent they spent the last several years. It's been 6.5 years, I think, them fighting this patent suit to get to this point. Okay. And the stock overall has been generally, right, volatile, but moving in an upward fashion. But as they got closer to the success that they announced, that $73 million award, you saw the stock moving up in a very orderly fashion, which it continues to do at this point. So there's the information there as far as that goes. Again, not a solicitation to buy. Do not chase any of that stuff. I don't want like anybody acting on stocks on my word. Do your own research. I'm here just to, give you some entertainment, some information. The show is about me telling you what I found out this week, and then you guys can take that information and do what you want with it. It's 40 hours of work crammed into an hour or two. So, high concentration information. All right, so that takes care of that. I don't know. We'll leave that chart up there for now. In the meantime, let's see what's on our list here. So I don't know if I mentioned this stock, Fathom Holdings. So real estate is catching a bid. Donald Trump wants to force Fannie Mae and Freddie Mac to buy mortgage securities, which presumably will push down mortgage rates. That's how it works. You buy debt and the cost of debt goes down. So if the cost of debt goes down, mortgage rates go down, then homeowners will be more interested in buying homes. So you're starting to see things like Fathom Holdings catching a bid. Stock ran up like 55% in like a week or so at the beginning of the year. And this has been kind of a little bit, thought about here. But you also have the company that is really getting the most attention on this, I believe, is Rocket Companies. Look at that performance. Okay, it's a larger cap name, not something that I am inclined to follow or cover on a regular basis. $65 billion market cap versus Fathom, which has a $43 million market cap. Like 1,500 times bigger is Rocket, right? Generally speaking, I like to go after the small company. I like the company that, can go from 1 to 10. The stock was 10 not too long ago. Why can't it go back to 10? Of course, you got to do the math and the research. But, being that this is a show where I tell you what I know, in case you guys have heard of Fathom, in case you've been looking into Fathom, what I'm going to tell you is that, right or wrong, my colleagues and I kind of looked into Fathom, and we just saw too many yellow flags, too many cockroaches in the closet. If you want a play on the real estate trend, Rocket is to me, it's obviously safer. It's a larger entity, but superior in that Fathom, it could catch a bid. It could get hyped. I mean, with a market cap of 42 million, I don't even know what the float is on this, right? This could be one of those stocks that go absolutely bonkers on a given day, but we're not here to gamble. Okay, so I had a small position in the stock at one point as I started to do research. I was like, I want exposure to real estate. The stock might catch a bid while I'm doing research. Plus, I want to not forget tiny position I bought. I got rid of that position after doing the research, saying I don't need to be reminded of this stock because it could work, but it doesn't check enough of the boxes. Now, as far as Rocket goes, be careful. Look at the chase, right? How much it's been moving of late. Just from here to here, you're talking about 2.5 months, 50% gain. I mean, if you miss the ride, you miss the ride. That's what it comes down to. There's like FOMO is a sin when it comes to investing. Don't be fearful of missing out, and you don't want to chase. Look, everybody seems to be, in on this stock. Can it go straight to 30 because of the way it's been moving? Sure, but I would rather, we get a pullback closer to the blue line. That's the 200-day moving. Oh, there's the 200-day moving average. That would be more attractive to me, right? Boom. Right? You look at that. See, you get a nice little pullback there to 19 instead of 23, and now you built yourself some cushion there. If you want to be involved in that name, I'm not. It's too big for my taste. Okay. People asking me, why didn't I pick or repick Iridex? Well, it's already being covered well. Okay, and good job, by the way. Kudos to the breakout investors. You can find them at breakout investors. Let's see. Come on. I want this. I want this. There we go. Breakoutinvestors.com. Okay. These guys do good work, good research. Legit people. They're not pumps. Right. They do pick small micro cap stocks, some with very low floats. There's nothing wrong with that as long as it's legitimate research, and they're not always right, but I believe, based on my interactions with them over the last many years, that they absolutely have the best intentions in mind. And they have a WhatsApp room, so if you go to breakoutinvestors.com and scroll down, there's your WhatsApp room link to join the room. That's open to the public. And they cover Iridex very well. I've become more picky about how I pick stocks. One, we're in a yellow alert. Two, I need independent third-party experts, right? And I can't find any for this one. So, I was dealing with the stock back here, and that was great. But, the latest iteration of Money Mark, 4 or 5 years later, pickier and pickier as I get older. It's just not gonna ring those bells, right? Plus, right, you've already got a group that's covering it real well. They've got a really small market cap, and what am I gonna do? Come out here and this could be a name that ends up jumping inadvertently because somebody out there says Money Mark loves this stock and tweets it out and all that. I don't want that. We don't want that kind of stuff. So let's see. That takes care of that. So let's see. That takes care of that. There are some other ticker symbols that meet the same criteria. Intrusions on that list could work, but there are other people following it, so I don't need to. Breakout investors, I think, keeps an eye on those guys as well. So, bottom line, so many people, what about this stock? What about that stock? Why don't you cover this? Why don't you cover that? Listen, bro, pump the brakes. That's part of the reason why you're seeing my new tone here, because it got too stressful, right? We've blown up over the last couple of years from 2,000 followers to 10,000 followers, right? And you can't understand unless you get up in front of 10,000 people every week for 2 hours, the pressure associated with being right, keeping up with everything, giving everybody everything that they want, and then having everybody up your you-know-what to pick their stock because you think that'll be, because they think that'll be some kind of endorsement, or at the very least, right, obviously, getting me to research your name, whether it's, whether I end up bullish or bearish, at least you'll know and feel good that somebody with a 30-year track record took a look at your stock. That's not my job. My job is raising my child and making sure my wife is happy, right? And 2 hours a week I come here and give you what I have, not give you what you want. And somehow or the other, we still have 300 people watching the show. It's weird. I didn't think the show. I thought half of y'all would go away, and maybe you will eventually. But that'll be only to the benefit of the people who stick around, because there is great information I'm giving you that you can use your way. You don't need me to guide you and tell you buy, sell, all that stuff. That's why, where is it? The spreadsheet, ideas and notes. We're going to stick to ideas and notes, and you guys can decide if these ideas, right, are what you want to be picks. But suffice to say, we have done pretty good. The stocks that we look at, the stocks that we get interested in, tend to do well. Even the ones you see that I closed, and this for the same reason. At the beginning of last year, just like the beginning of this year, I was feeling overwhelmed from the year. It was a great year. We did awesome, right? But it's still overwhelming. And I was like, man, I can't cover all these stocks. I'm going to close all these positions that did great for us, right? We had a number of them that did great. Some of them that I'm not so much interested in for whatever checkbox reason, blah, blah, blah. I'm going to eliminate them from the interest list. I'm not calling them a sell. I'm not dropping coverage, right? In some cases, they're graduating, or I'm just saying, look, people know about these companies. I mean, look at the names on the list, right? Celsius, Cantaloupe, Quipt, acquired, Nvidia, right? Like, these are names that I know. Kraken, my God. Evolve. Most of you have probably gone through an Evolve system already at this point. This is like slowly but surely becoming a household name. Like, these are names. I'm not giving you anything special once everybody knows. So if it's nothing special, why? Like, I'm not going to waste your time or mine talking about names that people already know enough about. So we took them off the list. But what have they done? Right? Took them off the list at the beginning of 2025. Here we are at the beginning of 2026. It's been 1 year, and 1 year later, the average stock that I took off of those lists is up 51%. What is that the takeaway? Money Mark does a bad job of getting out of stocks. No, right? The real takeaway is that Money Mark looks for good companies at good prices, and just because I might sell them or stop covering them or what have you doesn't make them bad companies. Do some of them turn out to be bad companies? Yes. Altigen never materialized to what I was hoping they would be. Quipt, management messed that up pretty bad. And yes, they got acquired, kind of saving the day a little bit. But I mean, we were in it 5, and they're getting acquired at 360. That's not a win. That's a loss, right? The good news is it's not a big loss. That's the nice thing, because when you have like these losses, when your losses are 40%, 40% is a big loss, right? 15%, 16%, 7%. There's some, there's a couple of big ones in here. But what's 42% to 167 plus? What's 46% to 233% plus? What's 24% minus to 172% plus? Right? And basically what that means is you have to be willing to take the good with the bad, the positive with the negative, the good times with the bad times, right? I don't know about you, but my portfolio is not performing at the same level as the Russell has over the last few weeks. But guess what? The Russell didn't perform last year as well as my portfolio did, or the year before for that matter, or the year before that for that matter, right? So it's okay. Sometimes you are going to underperform the market. Sometimes you're actually going to lose money. And then there's other times you're going to outperform the market. And the name of the game is, in general, to outperform the market most of the time. And if you do, then, right, you're winning. All right. So, boom, that takes care of that. Anything else on the list before we go to Q&A? Yeah, that's about it. That's about it. Let's see what's in the Q&A. Early 2:48. I like how we're going here. Hopefully you guys continue to like the format here. And we'll I miss the showmanship, but I care about learning more. Yeah, I mean, here's the thing, y'all. The showmanship is fun to some extent. Entertaining, I know, but it's also very stressful. It adds more pressure to me. Like, I feel less stress. I didn't even know I had this like tightness in my chest that was coming to me every single day, and I didn't realize why. I'm like, oh, I must be just getting old. But since this change over the last couple of weeks, that feeling has diminished, and on some days just doesn't even come to me at all. All right. So I had to choose my health versus laughs and entertainment. All right. Let's see what we got here. Q&A. If you have any questions, put a question mark at the beginning of the question. That will help me find it. Thank you for all the comments in the chat, by the way. I do look at them after the show. Chart, please, for ARAAF. There it is. Look at that. Heading back towards the highs again. Okay, so for those of you who, I didn't make this, a pick. It was an idea, of course, right? And because of how hot rare earths was, and MP in particular, right? And when MP took off, I had some really smart folks say, nah, listen, don't chase MP, here at whatever it was, $50. Get this ARAAF instead that nobody knows about down here. And at the same, let's take a look. Let's zoom in. I'm going to show you something. MP at $50. Boom. That spike to $50, right? Right there. We're going to leave this cursor right here, right? So when I hit the mouse, when we come back, it's going to be in the same place for ARAAF. This stock has gone from 50 to 69. ARAAF. See where we are? ARAAF was way down here at 81 cents on that same day that MP was 50. And it is now $2.72. This stock has tripled. Okay? 235% return versus MP over the same time frame from the gap up to 50 has gone up 61%. Very good return, by the way, but not guaranteed, right? These are, I would call this speculative. It's like, yeah, there's bullishness here. Yes, there's reason to be bullish, but like, how do you value these companies? How do we know what's going to happen? How much demand there's going to be for these rare earths, blah, 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 from these levels where this stock was 37 cents not too long ago, where MP was $11 not too long ago. I don't know. I'm not an expert at this. I do know that the people that I respect have just remained bullish on ARAAF throughout. For what that's worth, I don't own any right now. I didn't stay in. I didn't get back in. And for those of you who continue to like the name, though, that's your choice, right? I'm here to give you research and information, and you take and do with it what you will. If you liked the name and were willing to ride out the ups and downs or get out and get back in at some point, somewhere around the 200-day moving average is always a good place. And there it did get close to the 200-day moving average and started moving up. So congrats to those who got involved there. But there's the chart on that. And the only reason these lines are here is I just drew a line under the bottoms and said, okay, maybe this ends up being the limit on the top end. And that proved pretty prophetic here, right? Not for a minute, it looked dicey because the stock kept going up after it crossed through this line, but then it crashed back down. Okay, so that was a hell of a move going from 370 down to $1.40. That's a big drop off, and then from that $1.40 up almost 100% to this point back towards this line. So if you're playing a speculative gambling game, which I tell you not to all the time, this is a good time to say, you know what, Mark's right. I shouldn't be gambling with family money. Let me take my profits on this. It could be the wrong decision, but it's not. Right? Because if you don't know where this is going, then the only wrong decision is to be involved. Was the tax issue with GeoDrill a known issue? Why, yes, it was, my friend. It was a known issue. It was, in fact, in their MD&A. So they've been talking about this for a couple of quarters. Let me pull up my notes on this because actually, that's funny. It's good that you asked because because it happened today and because I was watching my baby and taking care of some other things, some phone calls, I forgot to add it to my list of things to talk about today. And come on. Where are my notes on this? So first of all, they have been talking about this as an issue for the last couple of quarters in terms of um, the Ivory Coast government has believes that they owe them money for taxes, right? So no big deal. You need to pay your taxes. And they are saying we already paid those taxes. Okay. And while they're trying to figure out if that's actually the case, um, the government said, listen, we're not going to have patience with this. You need to pay these taxes or we're going to shut you down, or we're going to, put some kind of sanctions on you, things like that. And so they said, all right, fine. You're the government. What can we do? Right. Let's pay those taxes, but then we'll dispute it. Right. We're going to try to get this back on the back end. So this has been being talked about for quite some time. And this is not new. Okay. This company, and I'm just talking about, like, this is not new in terms of, this is not the first time something like this happens. This is a company that operates in several jurisdictions around the world, including Africa, right, which is still not as modern as the United States, and they deal with things. So there was some examples here. One example, in 2017, they had a similar issue happen, same issue basically, in a different country. Okay. In that case, they were able to go through the entire court process before giving in, and were successful. Right. So they were in court against the government, and the government lost because it's pretty clear. You got a corporation here that gets audited. They're public. They know what they're doing. Okay. They know what they're doing. They got a great CEO at the helm. The guy owns 38% of the company. This is like 95% of his net worth. And he takes care of it like his own child. Because he's gonna leave it to his children. You see what I'm saying? Or the value. He's gonna end up selling the company, right? He'll end up selling the company at some point, and that money will go to his children someday. So he takes care of it. Always in the spreadsheets, always making sure that every single one of the rigs that he has purchased is operating at maximum profitability. Okay, for the strategy he has in place. And you see here, back here, he thought his strategy, needed to change. He made a strategic move to move the drills to other locations, to get rid of some customers in favor of more quality ones, and they're in the process, right, of recovering off of that move. Also in the process, it might have been, I don't know where exactly it was, but so in addition to the 2017 issue that came up with that other government, I don't know where my notes went. I could swear I sent myself an email on this, but so what? I'll wing it. I got the thoughts in mind. I just won't be able to give you the exact details. But the broad brushes are factual. There was an accounts receivable issue. One of their customers owed them a bunch of money. Okay, and a lot of people were saying cut them off. Like, they owed them money, and yet Dave Harper, the CEO, said, no, we're going to keep drilling for these guys. We're going to get the money. Dude, these guys aren't paying you. How are you going to get the money? Right? Well, Dave's been doing this longer than we have. There's a reason why Dave's the CEO and we're not. There's a reason why he's worth tens of millions of dollars and owns 38% of a company that is valued at $130 million. Okay. And so he said, no, we're going to keep them on as customers. We're going to work with them. We're going to get this money. And what he eventually did was he decided that because of what he was seeing in the gold market, because of what he knew about this customer and how they operated, that he would accept equity in lieu of cash. So they settled the matter, right? The customer didn't say F you. It was a good customer. Dave was right. It was a good customer. They legitimately wanted to pay off their debt to Geodrill. And so they made a deal to get paid back in stock. Well, Geodrill's been selling that stock, right, at different times of the market, and profitably. In other words, they not only got back all that money that was driving the stock down, just like they did when that other government was chasing them for taxes and they won, when this company owed them a bunch of money, they actually got more money than they were owed at the end. There are people, I was among them, by the way. I was thinking, man, I mean, like, if you can get 50% of that now, take it and run. Nope, we're going to get it all back. I know these guys. I've known them for years, right? I know this business. He took care of it and came out smelling like roses, came out with more money than what he was owed because of that. So we're in another situation here. Will they win? I don't know. They've been talking about it. They've been open about it even before announcing it. Okay. And we'll see what happens. But this is something that is in dispute. And they're going to, they're hoping that they'll be able to claw that back. But in the meantime, the government wasn't willing to be as patient as the one in 2017. So they had to make a decision. And I think this was the right decision because the alternative would have been to end up with certain sanctions from the government, which may have included shutting down their operations in the Ivory Coast, which represents a lot of revenue and profitability for the company. As you can imagine, because if you got a $9 million tax bill, you must have made a lot of money. All right. Hopefully that answers that question. Let's see what we got next. And yes, Canaccord initiated coverage, I think with a $3 or $2.50 stock price on Gatekeeper. So, more validation out there. Stock hasn't been great of late, but hopefully you guys learn and follow those rules. I'm not going to be here to tell you what to do. Especially now, I feel so much better, so much more zen, just giving you guys research and letting you, learn and decide what to do with it. And if you don't want to learn, that's your problem, not mine, right? But it became my problem with these tight chests and stress and all that stuff. There's the chart, right? And if you didn't know, on a spike, after all this time to take some profits, I don't know what we're doing here. Well, I don't know what you're doing here, but we're approaching the 200-day moving average there, so we'll see. The fundamentals remain, right? Nothing's changed. They even put out a press release validating what I had told you, proving that what I said was fact, right? $42 million of contracts since the end of the fiscal year in August. So, they got a really nice setup for this year. Nothing's guaranteed, but you got two Wall Street firms validating and verifying what I've been telling you since the stock was back here at like 30 cents. So if you've been following along since the stock was 30 cents and following the rules, then you probably did what I did, which is buy the stock, right? And as it moves up, I mean, bro, like from 30 cents to 60 cents, you've doubled your money. From 60 cents to 90 cents, you've tripled your money. To 120, you've quadrupled your money. At 220, 7 times your money, right? So if you're the type to just let it rip, then obviously you shouldn't be complaining about the pullback because you've seen pullbacks before. If you aren't used to volatility, then you need to adjust for that. I do. Okay. I'm very careful with my money these days. I don't want stress, right? Never mind from you guys. I got the stress of managing my own money, right? Making sure that I don't mess something up and end up like I've known people that were worth millions, tens of millions, hundreds of millions, lose that money. I knew somebody who was worth $100 million die penniless. I don't want to end up like that. So I'm careful, right? If you are lucky enough to build up a lot of money, then you need to start becoming more careful with what you've built because you don't want to lose what you had. Let's see. Let's keep going here. We had that chart. We had the geodrill question. What's happening with TSSI? It's pumping. I don't like those kinds of questions. I mean, the stock's going up, right? I said what I said last time I said, and I don't have anything new to say about that. Infuse chart. Why is it not a back of the truck? If there will be forced buying once it's included in the Russell, wouldn't this be a low risk, high reward in a short period of time? 6+6 consolidation. All else being equal, all else being equal, but that's not the only thing driving a stock. Don't get confirmation bias, okay? And I'm not saying this isn't a buy. I'm just not here to tell you if it's a buy or sell or back up the truck or all that. By the way, Breakout Investors, Aaron Warwick covers this name very well. Um, let's see. You're approaching the 200-day moving average, so you've got that. I do like selling puts on this name on occasion because the puts get a nice premium. If you don't know what that means, you can ask AI or YouTube and learn. I'm not here to teach you all that. And they've been doing well. Does that guarantee they're going to continue doing well? No, right? So what if they get into the Russell but they're not doing well? Which one offsets the other? That's what you got to concern yourself with. Let's see. Market cap 178, that's pretty good. I don't know if that's quite enough to get into the Russell yet, though. Certainly if they continue to do well, right? Stock goes up to just like 11. That's 30%. 30% from here, I mean, for sure would get them into the Russell. I just don't know. I can't say one way or the other. But I've been generally positive on this name. But there's nothing new from my standpoint, and Aaron Warwick knows more than I do, so let's offload that to him. So less stress for Money Mark, right? But you asked a question about the Russell, and I gave you the answer on that. How long could it take for the uplisting to occur? That's a good question. You could ask AI about that. I wouldn't assume very long. They did say. I mean, I took it down. The filing there. It may be in the filing, right? But obviously, they're doing this raise, and in conjunction with the raise, they are applying for the uplisting. So I think it's measured in weeks as opposed to months, and by that, right, months means 2. Weeks means anything more than 2. So, to get to 2 months, you need 9 weeks, not 8, 9. You can do the math. So I think less than 9 weeks. That's my over-under on that one for what it's worth. One of my sons works for Rocket and says they're very behind on technology, and he's a tech guy. Thank you for that information. And now everybody is a little bit smarter on Rocket. Let's keep going. Nerves of steel. Nah, man. Nerves of jello, right? If I had nerves of steel, I wouldn't be worried. I'd still be doing the Coach A-hole thing and the dummy routine and all that. Money Mark needs to calm his nerves and chill. Let's see. We got that question already answered. Got that question already answered. I don't understand this question about gatekeeper. You're asking too much. Can you? Oh, so I see something about the CEO bonus. I'm gonna skip the rest because it's way too much. I'm not here to read paragraphs. Um, y'all get over that. Please get over it. This company has a history of not doing shady things. Okay, and yes, I haven't gotten the answer. And by the way, y'all can call the company just as well as I can, right? While I'm changing diapers and raising a baby, right? I know there are times where I say, I'll get the answer to that. I'll get the answer to that. I'll get the answer to that. But at a certain point, you're like, I'll get the answer to questions from hundreds of people, and you got yourself a full-time job. When I closed up shop back in 2000 and what, 50, let's see, I retired in 2009. 15. I mean, right? I'm supposed to be retired 17 years at this point. In fact, this is crazy. Actually, last week, I think it was January 9th of 2009 was my first Seeking Alpha post, which came a few weeks after my decision to retire. So it's been 17 years. And here I am still working full time. Would you? Name we haven't discussed in a while. IDN looks like it's consolidating after that 50% jump. How would you look for a re-entry point in the stock? I'm not going to discuss that because if I give you my re-entry, then you're going to know what my re-entry is. This is why I say you guys got to learn these things for yourselves. There's like a rough idea, right, of where the 200-day moving average is for what that's worth, right? You got the risk reward lines here. They're operating on an increasing number of cylinders. Are they on 10 cylinders? I wouldn't call it 10 cylinders, no, but it is an increasing number of cylinders, and an increasing number of cylinders generally means an increasing stock price if you're coming from a low cylinder level down here. So I don't have anything new on them. But the overall, the fundamentals have been moving in a generally good direction, and we don't need, obviously a company doesn't move at the speed of every week. Every Friday there's nothing, not something new to say about a company. You saw with AHR, what I told you, these semiconductor companies take multiple years to decide to do business with AHR, some of them, okay? Multiple years. So, you find out that NVIDIA is in the pipeline, and then every week you're asking, did NVIDIA sign yet? Did NVIDIA sign yet? Did NVIDIA sign yet? And like the fourth time you ask that question, you're like, it must be bullshit. It's been 1 week. It's been 4 weeks. 1 month, 4 weeks in a process that takes 2 years. This is the funny thing about Wall Street is that people don't understand sometimes how long certain things take. Let's see. And yet the stocks continue to work. Why? Because people realize that the future is coming, right? Sophisticated investors understand that the future is coming, and they're willing to pay now for what is coming in the future. And sometimes that works, right? And if it works out, then the people that are buying at 28 now, even chasing, will be rewarded with a $68 stock price sometime in the future, according to these lines, for what it's worth, right? And then if it doesn't work out, maybe the stock drops, right? And what you hope for is, like I showed you here, the balance between the winners and the losers ends up being a big win. Simple as that. Curiosity stream, were you able to listen to their Needham panels? No, I was not, but it sounded good. I think I shared maybe one of the slides on one of the shows here. If I didn't, it was a very positive slide. They continue to do very well in terms of licensing content to LLMs. Video is becoming a stronger and stronger part of what these LLMs are competing against each other on. Really, and there's good reason for that, right? Like, I love playing with these things and getting them to make videos and stuff like that. And eventually, imagine the value of an LLM that can help somebody produce an entire movie without hiring actors or, cameras and all that stuff, right? We will be able at home to make movies. I can't wait for the day where an LLM can absorb the pages of a comic book and turn it into a movie. That would be awesome, right? And your favorite comic books come to life as a full movie. I don't see any reason why that can't happen, right? And that'll be valuable. Imagine the value of that content. I would pay plenty of money to see some of my favorite comic books of old become movies. The same stories that I read becoming actual movies. We've seen that happen. You saw like The Watchmen. That was an old comic book that became a movie. A lot of the Avengers movies are previously comic books, stories, right? The comic books in a way are like scripts for movies, except with pictures, right? You got the whole script, what everybody has to say, you got the scenery, you got the outline, and that way a director can look through the comic book and be like, this is exactly, right, how we envision the movie going. Okay, cool. A lot easier than seeing descriptions. If you've ever seen a real script, a real movie script, it's boring. It's very descriptive and all that stuff. Comic books are a lot cooler way of doing that. And we've got several decades of comic books going back with great stories in them. And imagine just being able to put all those pages, input them into an LLM, and have the LLM crank out a movie. What's that worth, right? But the LLMs have to be trained, and that's why Curiosity Stream has been doing well. Not the stock, the company continues to do well. right? And we talked about the stock last week and how they've given out 45 cents of dividends since April 2024. So part of this poor performance is overblown because you got to actually add back 45 cents into the stock, which would take you to 410 instead of 362. Right? And keep in mind that what may have happened, I think I kind of redrew these lines a little bit so you could see what may have happened is the stock may have gotten overhyped at this point. I don't know if I was, I covered it back here, but certainly as it got up to these levels, I probably wasn't, throwing out tons of, hey, you got, I certainly wasn't saying to buy the stock at these levels, right? You know me. You're not going to see me telling you to buy stocks at these levels. That's what pumps do. And it may have gotten overblown. In hindsight, right? You got to look at the chart, and at the time the chart looked like this, looked okay, normal. But in hindsight, maybe this is what the chart really was, which means that it overblew. Now here's a little technical lesson for you. These lines are not made of glass. People said it broke the downtrend, it broke the uptrend. It didn't break anything. It's stretched. These lines are not made of glass to be broken. They're made of rubber to be stretched. And if a stock gets too much hype, too much excitement, too much ebullience, too much pumping, it stretches that top line of where a stock should go. And what happens to something when you stretch it? It snaps back. And so what ends up happening is, see the sharp move up? Sharp move down, sharp move up, sharp move down. That's what you'll end up seeing with some of these things. And sometimes what happens if you push up through the top line and stretch the top line, you will also eventually stretch the bottom line. Think about it in real life, right? If you actually could, shoot some kind of rocket through to a rubber ceiling that isn't going to give, right? It'll stretch, but then the rocket is eventually going to snap back down to the rubber floor. It's not going to just stop when it hits the rubber floor. It's going to stretch that rubber floor and snap it back up again. Okay? And that's what we end up sometimes seeing, is that if we stretch the top line, then you end up stretching the bottom line, which some people will recognize as breaking, the chart breaking. It's not the chart breaking, it's the chart bending. If the fundamentals are good, which I believe they are in this case, and in this particular instance, I think this is an overblown situation in terms of traders seeing the chart as broken, not calculating the dividends that have, should have been added back into these charts, but you can't. Charts don't add dividends back in. They only calculate for like splits. Hopefully that makes sense. If it doesn't, sorry, some things are a little complicated. SMCI chart, iron chart, okay, for what it's worth. Crescendo chart. Interesting. It keeps trying to break out of this wedge that has been forming for, it's crazy, 2 years. It's a 2-year wedge. It's wild. You don't often see a wedge take that long to resolve itself, but here we are. When will it resolve? I don't know. I mean, it could break out tomorrow and go straight to 10, but like, if we stretch the lines of this wedge out further, right, this could just keep going until the end of the year, conceivably. I don't know what the answer is. I never do. My job for my family is to buy stocks at what I perceive to be attractive prices and hold until they achieve what I consider to be an unattractive price. Simple as that. Let's see. For speculative and grapevine names, how do you decide that the hype is peaked? Oh, that's tough. That's tough. I don't look. First of all, it's a yellow alert, so I don't really like speculative and grapevine names in a yellow alert. But if I'm going to get involved with a speculative, or a great find name. Great finds, I love great finds, right? Like, it's a great find. We've got a situation where, like, outer space is a hot topic right now, and you've got these names that are well suited for the space theme, right? Like LightPath comes to mind. And people caught on to that, and the stock takes off. Well, here's the thing. If you caught on to that down here, right? And you said, I see space as being an up and coming hot topic. And I see LightPath as having some unique capabilities in that regard. Well, congratulations. You bought the stock, right? Maybe on this dip, right? So you weren't chasing, for example. It was here, the 200-day moving average, and you take a shot at it. It's speculative. You think it's a great find. And it starts taking off. At what point is it no longer a great find, but a wait time? Because that's always what ends up happening, right? Something that is a great find, a company that has the technology to make a teleporter, that's a great find, right? And everybody gets hyped. But what inevitably happens? Where's the teleporter? Where's the teleporter? Just like AHR. Where's NVIDIA as a customer? Well, we're waiting. We're waiting for NVIDIA to fully determine that AHR products are appropriate for them. And that's called the wait time. Right? And I'm not saying that NVIDIA is not a customer now or anything. I'm just using it as an example. That's the wait time. And the wait time is really bad for stocks because people lose patience, right? All the gambler mentality out there, it's not a hot name anymore. I'm moving to the next exciting name. I don't know when that ends. Like, from this standpoint, if you had bought at the 200-day moving average and the stock ripped to 430, which is almost a 200% gain. In fact, if I push it all the way up to the top of that little dot right there, 200, the stock tripled from that level in 2 months. As far as I'm concerned, maybe that's it, right? We just tripled our money in 2 months. Maybe the wait time is now. And the stock pulls back. Nobody knew this was the top, right? Like, there's no magic number like a triple or a double, right? There was no knowing that it was going to start going down from there. It could have started going down here, or it could have just kept going. But it has kept going overall. After a dip, kept going. Is the great find over? Is it a gold mine? I don't know LightPath well enough, and this is the problem, right? I can't give you the answer to these questions because it's too early in the company's cycle, right? To be a great find. That's like a great idea. And for an idea to become reality, it takes time. And it's really, really hard to ascertain if a company files a patent for teleporters when we're actually going to be able to safely teleport. Right? Like, how long have we been talking about a world where we have, the whole world being electric vehicles driving themselves? It's been a long time, right? Every year, Elon says, by the end of the year, I expect 1 million autonomous vehicles on the road, and we still don't have that, right? And he'll predict it again, and he'll predict it again, and he'll predict it again, and one of these years he'll be right. But that's his job. His job is to keep people engaged. Like, we're making progress towards that. It didn't happen last year, but I think it's going to happen this year. Very tough. Very tough. So just be careful. Like, if you're lucky enough to catch something like this and it spikes, take some profits. I mean, I would have been, like, the stock doubles. If I put 100 grand in here and it goes to 200 grand, let me take 100 grand of that off the table in my pocket. Now I can't lose because I started with 100 grand and now there's 100 grand in my pocket, but there's still 100 grand out there of this stock. But this stock can go to zero and I still have my original 100 grand. I can't lose. I'm playing with house money using the gambling analogy. Clear fill chart. Look at that. Very interesting. It's been bouncing along the bottom for a long time. We'll see. We'll see. Another name that the breakout investors are covering pretty well, better than I can with my bandwidth at this point in time. I said that Intermap is a binary outcome, but market makers are trying to take advantage of the quiet to drop the price to cheap. Is it still a wait for the second inning, or is it very attractive right now? Dude, Have you been talking to the market makers? Did you go to the bar with the market makers? Do you know the market makers are driving the stock down, or are people just getting nervous? Are there just more sellers than buyers? Are people just getting tired of the delays that have occurred with regard to the Indonesian deal? Right? That happens. And does that mean that it's justified? No. Does that make it a great buying opportunity? Not necessarily, but if you believe what you believed here when the stock was, right, getting up within its short-term channel, stock was $2.50. Now it's half of that, $1.25. If you believed that they're going to win the Indonesian deals here, why would a few weeks delay be worth a 50% drop in the share price to you? That makes no sense, right? Because to recover a 50% drop, you have to jump 100%. Okay? So if this delay in Indonesia's decision making, was it 1 month, 2 months, right? Doesn't change anything, and the win gets them right back to 250 and beyond, then you're in a situation where people just gave you the opportunity to make 100% on your money in a few weeks for the sacrifice of being patient for 2 extra months relative to what you believed back here. And I don't see any reason why a belief system should have changed over the last couple months over whether or not and how much they're going to win of this deal. My view hasn't changed on that. So, I think they're in a good position to win it. What's that worth? We'll see. Right? I've got my opinion, you've got yours, and you got to make your decision based on that. But, if you don't think anything's changed, a 50% haircut sounds pretty attractive to me for what it's worth. Somebody asked a question about Alarum that was actually a statement, so I'm not going to repeat it. But to that, I would say, so what? I didn't like management. I didn't like how the whole situation was handled. Yeah, when I don't trust management, I just walk away. It's one thing if you can't rely on management, right? Like management doesn't tell you enough, or they're vague or whatever, right? So you can't rely on them. But that's different than not being able to trust them. A truthful management team that isn't specifically helpful is one thing, but a management team that will deceive you, even if unintentionally, is not one that you can count on in any way, shape, or form. And there's thousands of stocks out there to choose from. So when in doubt, throw it out. Curiosity Stream, would you expect their investor campaigns to materially increase analyst reach? Well, yes, of course. When you go out and talk to more people, then you've increased your reach. Whether or not that reach results in more people buying your stock, right? That's a different question. And from your experience, are these investor conferences typically insightful to learn more about the companies? Yes. Investor conferences, of course. Sitting down, right, with a notebook and a pen, which I always do at these conferences, and either listening in a room full of people, right? This is how it works. You go to a conference, it's like LD Micro, my favorite conference. It takes place at a hotel, right? They lock down the whole hotel, right? Well in advance. It's January right now. They say, listen, what do you got going on September 16th, 17th, and 18th? They go, nobody's booked any hotel rooms for those dates. Okay, we're locking down the whole hotel. And then what they do is they take the conference rooms, they take a lot of the hotel rooms, and they turn them into meeting rooms, right? And so in the conference rooms, you get like 50, 70, 100 people all watch an investor presentation, watch the CEO or CFO talk about the company. walk you through. And then you can ask Q&A and all that stuff, just like this show, basically, right? And then separately, you can schedule one-on-ones. And so you go to these hotel rooms, right? And you walk into the room at 12:30 to meet Gain Erickson, the CEO of Air, one-on-one. And then you have a one-on-one with him. How can that not be insightful? How can you not learn from that, right? I don't like flying for business. I'm out of business. I'm retired. But I go to LD Micro. I do fly out to LA for that because it is so valuable. Yes, absolutely. What it really comes down to is this, though. Once we leave, once all of us analysts and investors leave with our notebooks and pens, we go home, we reflect, we sleep on it, we wake up and we say, these are the 3 companies that I got really excited about. Let me dig into those first. And you dig into each of those 3 companies one by one. And it might take weeks for each one of them for you to figure out if you like it enough to buy the stock. So imagine this process, right? You hear that CuriosityStream is going to a conference on January 1st, right? On January 2nd, the stock is not moving. And you're like, oh, it must have been a shitty conference. No, stupid. People, first of all, they got to get home, right? The conference on January 1st, everybody goes home on January 2nd. Then on January 3rd, we wake up and decide what companies that we saw at that conference. And I see like 24 companies at a conference. Which 3 of those companies I want to dig into first? And then the one that was most interesting, I spend weeks on. And maybe at the end of those weeks, I'm like, not as exciting as it seemed at the conference. Out the window. Next one, right? Do the same thing. Now it's been more weeks, maybe a whole month since the conference. So we're now at February 1st. And I'm like, nah. And I get to the third one. Let's say it's CuriosityStream, right? And I go through weeks and I'm like, yeah, this is really exciting. And then I dig even deeper. That takes more weeks. And that gets me to March 1st. And in March 1st, I say, damn, I want to buy this CuriosityStream. And I start buying it and buying it and buying it and buying it. And maybe other people that went to the conference came to the same conclusion in the same process. And all of a sudden in March, you start seeing the stock going up. And what you don't realize is that March 1st reaction, the stock moving up, and everybody's, what's going on with CuriosityStream? Well, they had an investor conference 2 months ago and people are now reacting to it. You'd never believe it if that's what I gave you as the answer before telling you the story, right? My opinion on Syntep Optics, that's being covered in Breakout Investors 2 as well. I'm generally, what I will say is that the research that has been done on OPTX is phenomenal research. All right, that's all I'll say there, and you guys can do the rest if you guys are following what's going on. That research. Gatekeeper has a press release yesterday mentioning California School District. Yeah, I mean, anybody that's watching this show should be watching the news of any of the companies that you own stock in or are interested in, and they came out, right? That shouldn't be surprising. Every few weeks, you should expect them to come out with, right, news of a win or releasing, delivering product, stuff like that. They're pretty good about that. There's the IZEA chart. I don't know if best way to zoom in on that. Okay, $3 in cash roughly they have. Stock's been pulling back. A lot of stocks have been pulling back. It's funny, you see the markets hitting all-time highs, but tech has done terrible over the last couple months. Tech has been underperforming. The Magnificent Seven has been underperforming. The other 493 stocks in the S&P 500 are outperforming the Magnificent Seven the last couple months. It happens, right? Not all stocks go up when the stock market is going up, and not all stocks go down when the stock market's going down. Remember my old story about TPCS back in 2018 when the market tanked 27% in the fourth quarter and TPCS went up 27% in the fourth quarter before going on to go up another 63% on top of that. So don't freak out about the stock market and the yellow alert and all that, but you do have to be a lot more picky. I held on to this stock back in late 2018 because I believed in the safety of the business that they were in and what was going on. Okay, and that worked out pretty good. Took profits, bought more, took profits, bought in, took profits, and then that was a mess, right? It came back down. I bought in, back down at this level again, and it didn't work out. Okay, 1, 2, 3, 4, 5 times it worked out. The 6th time it didn't. It's like rolling dice, right? 1, 2, 3, 4, 5, 6 on the dice. This time I rolled a 1. Boom, it dropped down. But then we did the clear out trade, able to buy the most number of shares at the lowest price. And now here we are at $5. And obviously you see week after week, more news coming from the Navy talking positively about what's going on there. So beautiful. Just a little congrats on your newborn. Someone like me is just learning. What would be your best advice to start trading? Don't start trading. Learn how to evaluate companies. I don't like trading. Listen, you can try trading, right? Try, right? Learn all you can about trading, paper trade. And once you've got all the things down, I don't know who you're going to, use as your mentor or how to learn how to trade. I don't consider myself a trading mentor, right? I do trade. I do my own trading. I got my own way of doing that. I'm never going to teach any of that stuff because I don't want to proliferate the mentality of gambling, jumping on stocks, all that stuff. Okay. But if you're going to do it, go all in terms of, you go to work 9 to 5, you come home at 6, and for the next 3 or 4 hours, you should be studying this. It's like going to school, going to college, until you understand everything perfectly. Like you feel like you could get an A+ on the exam. And then you can throw a small amount of money in and see if you're successful. And if you're not, fairly quickly, I would kind of give up, to be honest, because some people are just made to trade and some people aren't. I'm not. It's taken me 30 years of doing this. I've been in the stock market since like 1992 or something. Okay? And following the stock market since like 86. And it took me decades to become decent at trading. And I would argue if I didn't trade, I would make more money. I don't know because I don't keep track of all that. But I honestly think that my investments do a lot better than my trades. So learn how to invest, not trade, my friend. That's my advice. Are you planning to continue sharing risk-reward lines for any new picks? For new picks, we'll see, right? We got to find a new pick first. And not only is it hard, but I'm also hesitant because look what we're dealing with here, right? The market's at these levels. Anything I pick is going to potentially be swimming upstream into a market correction. Potentially. I'm not predicting a market correction, but look at what we're dealing with here. Every time the market hits this red line, right? Sometimes it keeps going higher, right? But how rare is that? This is a chart going back to 1990, right? This is a chart going back to the 80s. This one goes back to the 60s. The Dow 30, I got a chart that goes all the way back to 1915. And look what happens when it gets to the red line. Sometimes it goes above, but it always ends up lower. At some point, you always get an opportunity to buy the market lower when it gets to the red line. So why would I would feel irresponsible. But we'll handle that when we get to it. What's your opinion of ASTI? I don't know. I don't know the name well enough. I know the ticker symbol, but I don't know the name. Let's see. What do we got? Some kudos. I appreciate it, y'all. Look, I really appreciate that y'all are here and liking the show how it is. And I think we're gonna tighten the show. We're gonna try to make it more action-packed and maybe cram it all into 90 minutes. We're at almost 100 minutes now. We're definitely gonna finish before the 3:55. with these questions coming almost to a close now. So, right, shorter show, more action packed, less time on BS, and then that hopefully can make up for the fact that it's not so exciting, with the Coach A-hole and all that. And the fact that we're in a yellow alert. That's so boring. Let me tell you. Like, if you think it's boring to be in a yellow alert, try being somebody that all day, every day is trying to find the next new winner, and anything that looks good is already, too expensive to feel excited about. Could you tell if A to Z is still speculative or in research? I don't know what that's supposed to mean. I think you're talking about this stock, right? This company right here. I haven't talked about it in a long time. Still speculative to me. And what I've always said is I think the competition, the competitive environment is one that is going to prove challenging for them. I don't know if that's where the line goes or this, but I mean, you see the chart here. It broke under the 200. It challenged the 200 and failed and has stayed under the 200 since. It briefly broke above, but dropped down. So from a technical standpoint, that's not a great sign. I haven't heard a lot of progress from these guys, so not yet is basically what it comes down to. Let's see here. Do you think that the most recent gatekeeper contract announcement is reason for concern because it would imply the lack of press releases was actually due to a lack of contract wins? I'm glad Coach A-hole's on vacation. Bro, they signed $42 million worth of contracts in the last few months. $10 million a month, basically. If they did that every month, it would be 120 for the year. In 4 months, they booked more business than they make in a whole year's revenue. They could put out 0 press releases for the next 8 months in a row. 0 press releases. And still have a better year than they had last year because of what they booked in just 4 months. Chill out. Would you ever pick a small sub-billion-dollar Japanese stock? I don't see why. I don't. There's no stock that I wouldn't pick under any circumstances. I'm going to be careful about stocks that have super low floats because I've just seen that people can't handle themselves. No matter what I teach, no matter what I preach, right? There's always going to be people that ignore the lessons and just, right? And I don't want to be responsible for that. It's their fault, right? It's your fault if you chase, and it's your fault if you lose money and all that. But that's not how I operate, because I'm here to teach, right? Because I want people to be successful. And if at the end of the day, if somebody isn't successful, the other thing I was taught is that the CEO, right? I'm the CEO of my life. I'm the CEO of this show. And a good CEO is taught that anything that goes wrong is the CEO's fault. So if anything goes wrong in my life, I blame myself no matter what. If somebody rear ends me, right, on the highway, I'm going to blame myself. There's got to be something that could have been done to avoid that, right? And ultimately, maybe there wasn't, but I'm still going to start with, it's my fault. Most people always look to blame other people for that. Look what you made me do. How often have you said that? Look what you made me do. Did I have a gun at my head that made me spill some water? Just because you distracted me and I spilled some water. Look what you made me do. No, look what I did. I couldn't handle a distraction and spilled my water. I need to be better at that. Right? So another little preachy thing. Here we are at the end of the day. But yeah, and there's no reason why I wouldn't cover a stock if it was sufficiently attractive, right? I'll be hesitant, right? I don't live in Japan. That's a big reason not to. So things like that. But something tells me you might be fishing for information too. And I'm not going to go for that. You'll never trick me or, trap me into, giving you guys hints as to what my next pick is or any of that stuff. Don't do that. And I'm not saying that you were, Daddy, but, you know, anyhow. Um, yeah. And then this guy's like, I'm not sure if you were referring to the owner of Dragon Ball in One Piece. Yeah, TOE AF, which doesn't show up on my screen here. It's actually oh, where is it? I could swear. Oh, maybe I don't have Japanese stocks on here either. And that would explain why. GOEAF. I own some of this. Not advocating to buy it, but um, you can look it up yourself. I had mentioned it before as, I love companies that own content, and they own a lot of content. They don't own Dragon Ball Z, but they own a lot of content because they license Dragon Ball Z to create that whole series, right? That epic, legendary Dragon Ball Z series. And they own that content because they licensed the characters to make that content. And now in the age of AI, they can probably repurpose that content to make more and more money. All right. So, that's the concept that I like. So I got some money in here, not a lot. And, if you're asking me if I would make this an official pick, probably not. I mean, this is a company with a half-trillion yen market cap, we're winding down, by the way, folks. If you guys want to sign off, I don't blame you. But let's see. 3. So that's, roughly $4 billion is their market cap, is what it looks like here. Don't take my word for that because I didn't take notes ahead of time. So there we go. 346, quarter before 4, and we're down. That's it. That's the last question. Condensing things down. I get more time with my baby. You guys get more time with the end of the stock market. We got a long weekend ahead. That's it, y'all. Okay. Friday, Stock Talk Live. Last question in the queue here. Any opinions on IREN? Nope. I've been hearing this stock everywhere. And that tells you a lot. If you've been hearing about the stock everywhere, I automatically am not going to love it, because if everybody is already looking at it, what are the chances that you can do something, that you can find research that nobody else did, right? You have to have something special to have an advantage. Otherwise, you're better off just finding, the established winners, companies that proven themselves year after year after year to be a winning company, and just buy them on the low and just hold them for the long term, right? That's all. Enjoy your holiday weekend, y'all. I know I'm going to do my best to do so. Go Pats on Sunday. For those of you who are Miami Hurricane fans, I grew up a Nebraska fan. That was the first place I went, as a first time I was on an airplane. I was 15 years old, went to Nebraska for the National Track and Field Championships, and as a result, I fell in love with, the place. I got my own dorm room. I got to live college life as a 15-year-old for several days, and was like, right, a Nebraska Cornhusker fan coming out of that. And if you guys are old enough, you know the wars that the Huskers went through with FSU, UF, and Miami. So not only as a Boston fan am I not a Miami fan, but as a Cornhusker fan from way back. I was never a fan of the Florida schools, but I am very impressed with the Hurricanes and what they've done. That dude Malachi, wow, as a freshman, he's impressive. So I'm going to say, for the first time in my entire life, go Canes on Monday. And we'll see y'all next week, assuming, there's enough to talk about. Have a good one. Take care. Got this. That might be worth. See what we can. Just cool.